Womp womp. It's the trade wars market, we're just living in it. Another round of threats from the White House sank hopes that we're on the cusp of a tariff agreement, and took the stock market with it. In today's After the Bell, a case of the Monday's stock slumped across the board Monday, after China threatened to pull out of talks with the U.S. if another round of tariffs goes into effect, and tech didn't help much. The Dow Jones Industrial Average lost 92.55 points, or 0.35%, to 26,062.12, while the S. It's easy to understand what has markets so spooked. Investors were thrilled to hear that the U.S. and China were coming back to the table for talks, so if negotiations are cancelled, we'll be that much closer to staring down the barrel at a full-blown trade war, which no one wants. Yes, the U.S. market has held up so far in the face of tariffs, unlike other markets, but only a fool would believe that the U.S. economy can withstand a protracted trade war, says Eaton Vance's Lou Piantadosi. Our economy has remained resilient so far, but it's difficult to imagine that continuing, given how interconnected the world is and how large multinational companies rely on global trade, if both countries go nuclear. The administration surely knows this, and for a president who hangs his hat on how well the market does, it would be extremely undesirable to spark a sell-off, especially ahead of the midterms. That leads Piantadosi to be confident that today's setback aside, an armistice isn't out of the question. A controlled descent is all the more desirable given that the market can't go up forever. While the U.S. remains the pace-setter of the global economic expansion as growth weakens elsewhere, FTSE Russell's Alec Young writes, it's not invincible. Global growth is downshifting, and most economists still expect gross domestic product to slow across most major regions next year, including the U.S. and China, the two powerhouses behind nearly all global growth this past decade. Young continues, yikes. At least we still have tech, right? Well, not so much today, as the Nasdaq's decline demonstrated. Amazon.com, AMZN, is embroiled in a suspected data leak including bribe-taking employees, and concerns about the new iPhone and suppliers dinged Apple, AAPL. Well, Apple may have lost some shine, and while the FANGs, Facebook, FB, Amazon, Netflix, NFLX, and Google parent Alphabet, Google, may be gunning for its perch as the world's most valuable company, none has managed to create quite the same euphoria surrounding Apple in its prime, in notes Leuthold's Kristen Perlberg. Like other giants of the S. Who knows, maybe if we finally get a resolution on tariffs, it could be industrials, and CATBO, Caterpillar, CAT, and Boeing, BA, will ride again. The hot stock Mosaic, MOS, soared to the top of the S. Shares of Mosaic gained 3.9% to $31.99. The fertilizer makes highest in more than a month. Barron's recommended shares of fertilizers stocks on August 18. The biggest loser ABMed, ABMD, tumbled to the bottom of the S.